What's going on, you guys? Back with another daily recap here. I'm going to go over some of the trades I took today, some of our trades that we've had running and are still running, and some losses that we took as well. I'm also going to get into some of the news that we have coming out tomorrow. We have the personal consumer expenditures, the PCE, coming out tomorrow. We also have the Chicago PMI. Yeah, right? PMI. The Chicago PMI is coming out tomorrow? Yeah, Chicago PMI is tomorrow. And we're going to talk about how those affect the market. So I guess we will just start with a trade I took today. I don't have it marked up on here, but it was a pretty lucky trade in my opinion. So looking at this, if we scroll out to the daily time frame, I took a sell at the 61.8 here, which is my J1 entry, and I was pretty lucky. When I say it was lucky, is the timing I got out was lucky. I got out on this third candle here, pretty close to the bottom, somewhere around here, 40.40. And I say it was lucky because I just was comfortable with the amount of money I made off the trade. It was a bit of a larger size position, and it was not a trade I was expecting to get into. But when I seen the 68.18 kind of get broken at this level, we did have some pullback here, and I entered a position on one of the pullbacks on a lower time frame, 5 minute, which is, like I said, it's not really my style of trading, which is why I was able to get out so quick and why I was comfortable with getting out quick. I made my money, and that's all I wanted to do for the day. So I did take a small position here, well, small in consideration to what I generally would take for the amount of pips caught wise, but I did place a larger position than I normally would on something like this, and it went well. It went in my favor. We got lucky, but yeah, it's definitely not something that I would generally take. So if we can break this down actually. So we had this 61.8 here, and what I ended up doing was I drew a fib. I think we were right around here. Let me zoom this in. Might have even been on the 5 minute. Oh yeah, actually here it was. This is what the move was. So we got this push here, right here. So I drew a fib on the 5 minute, kind of just doing some testing, and I was able to get in on this 61.8, and when we got the full retracement, so my trade setup looked like this. So I took a short position right at the 61.8. I had a limit order set. My stop was right above these two wicks over here to the left side, and take profit was right around the bottom here. So 22 pip stop loss and a 69 pip take profit. Yeah, like I said, it's not a trade I would generally take, but I was a little bored sitting at my desk, so it was just a position I decided to get in, kind of trying some new things out, and it worked out in my favor. I don't think it's a trade that I will continue to take. I might start testing some strategies on the 5 minute and 15 minute chart, just kind of seeing how well my strategy works with the J system swing trading and moving it down to these lower time frames, because what I'm trying to do is I'm trying to get into positions and out of positions quicker with a larger position size, smaller stop loss, smaller take profit, larger position size, still risking the same amount, and just trying to, I'm testing things out right now with my strategy. This swing trading strategy has been working out for me for quite some time now, but I'm kind of getting the itch to be that 9:30 trader done by 10 o'clock. So we're just testing some little things out here and there, and first try worked out pretty good, but still in the testing phase, so we're not going to talk about it too much. But considering what is going on with the markets right now, so we were looking, let me zoom out to higher time frame. We were looking to get into short positions, which we've done pretty well so far in the S&P over the last 2 weeks here, but we're starting to push higher now on the S&P 500. So what I need to see is some sort of pullback and start looking to get into some potential long positions. The RSI right now is sitting up at this 70 level, which is telling me that we're getting a little bit overbought, so that's a good signal. We might start to get this pullback pretty soon here. Moving averages are moving up. We have this cross back here. We just recently today broke this zone. You can see this blue box right here. So we broke this zone, and what I want to see now is something like this. I would like to see price start to pull back from here, and if we can come down somewhere into this zone, this 50 or the 61.8, either a J2 or a J1 entry, I'll be looking to get into some long positions on the S&P 500. Now, why am I looking to get long? Right now, if you take a look at COT data, COT stands for the Commitment of Traders, and this is a report that the United States regulations agencies require the big institutional traders to report their position sizes once a week. Now, if you look at the S&P 500 for them, they're starting to get very bullish on this, which means for me, I need to start looking at long positions on here. If you sit down and you look at retail versus institutional, and you look at the success rate of them, institutional traders tend to be much more successful than retail traders, right? Your parents always told you, don't follow the crowd. Like, if they jumped off a cliff, would you do it too, kind of thing, right? What you want to do is you want to follow the smart money. You want to be in the same positions that smart money's in. So what I like to do is I kind of like to think of, where are the retail traders sitting? Where are the institutional traders sitting? And where can I potentially get into a position based off of what they're both doing? So right now we have retail traders. It's kind of 50-50 right now with the retail sentiment, but that 50-50 could get us to get somewhat of a pullback down here if the retail traders do decide to sell off. And then with COT reporting a lot of long positions on the S&P 500, once we get back down into this position, I would feel comfortable taking a trade to the upside. Now, let me delete this. Now, right now, it's really just a waiting game, right? We want to see price pull back. We're not going to get into all of this bullish volume that we're having right now. We're going to wait for some bearish volume to come on. We're going to wait for this RSI to pull back down and come back down to a retracement zone on the 50 or on the Fibonacci, and hopefully we can get something like that, like a 50 or 61.8, the J2 or J1 position, and we can get a nice position to the upside. So it's kind of what we're waiting on right now. I will probably wait until price moves through the night. I'll start looking for something in the morning. Hopefully we can get some rounding over. If I can see price start to round over here and pull back down and give me something to draw my Fibonacci to, that's when I'm going to start looking for positions on S&P 500. But until then, it's kind of a waiting game. We're seeing the same thing on the NASDAQ. The NASDAQ had a fantastic push to the upside today. Almost the exact same thing. RSI is moving into overbought. Price has been moving to the upside quite a bit. We did break this recent supply zone, and now that we're breaking this supply zone, same thing. We just need to see a little bit of a rounding off here so that we can have something to draw our fib to. I would like to draw my fib from right around here. So if I draw my fib from the bottom here, and let's just say price ends there, I will be looking to get somewhere around this. Same thing. This 50 looks very nice if we were to draw a box here. This 50 looks really good for an entry. Let's see, if we take it down to the 61.8, which is our J1 entry. I do like the 61.8, but it kind of seems like we're in the middle of price here. We're with the 50, we're sitting at the top at this J2 entry. We're sitting at the top of price. So I think the J2 is going to be my ideal entry here. So it's really just a waiting game. We need price to round over and then start coming back down so we can look for entries. Moving average is also moving nice to the upside. So, I mean, it's pretty much a no-brainer here. We're just waiting for price to come back, and we're going to follow the trend. EURUSD, we did talk about this trade. Been holding this trade for about a week now. And, I mean, it's just performing fantastically. We're almost at full take profit here. Once we do hit this full take profit, I will take another 25% off the trade and let the remainder ride and just move stop losses into profit as we create new structure. So something like this would be nice. If we can break this zone and do something like this, if we can break, retest, and then continue to move to the upside. Once we break this level here, my stop loss will then move to the bottom here. And then same thing, if we can come back down, get into this zone again, and then move to the upside, once we break this zone, my stop loss will move right to here. So it's just going to kind of look like something like that, but at the same time, it's just a waiting game. All we're doing is waiting for price to create new structure, and we'll just continue to move stop losses on this trade. I'm very happy with the outcome, and I'm struggling to delete these. And yeah, I'm very happy with the outcome. So right now we're just going to continue to move stop losses as price moves to the upside. Moving into gold, we are starting to see somewhat of a round off here. So if we look right here, we did see a cross. And that cross, for me, I was hoping that what we would see is price continue to move to the downside and give me that entry that I've been waiting for. But we didn't get it, unfortunately. Price started to move back to the upside, and it looks like we're getting another cross here shortly. So if that does happen, that's an awful drawing. I hate that it came out that way. If price does continue to move to the upside, we got a couple options here. I'll delete this. And so we got our fibs drawn, swing low, swing high. What I would like to see is this 61.8 met. If we can meet this 61.8 down here, taking some long positions here with stop losses just below structure, take profit at the top of the fib. That'll give us almost a 3-to-1 risk reward trade, 281 pip stop loss, 747 pip take profit. But if that does not happen, if we do not get price moving down into this zone down here, the other scenario I'll be looking for is price to come up here, break this zone, come back down, give me something to draw my fib from here. Actually, I would draw my fib from this zone here, because the reason being is we got the fib from here to here. Now we've created this low here, and I need something to draw my fib to up here now. So two options. We can either see price come up, break, retest, give us something to draw the fib to, get in at one of our J entries, or we can see price come back down into here, reject off this zone, and take something back to the top. So two options with gold. It's really just a waiting game right now. We have a lot of sideways movement in the market, so it's really just waiting, seeing what happens, and reacting to the price action. Moving into USD JPY, looks like we're coming into one of my entries here at J2, but I don't know if I'm looking for shorts anymore, because what we just seen was a bullish cross here. We also see the RSI continuing to move to the upside. So with that being said, I'm going to be starting to look for longs. Another reason I'm looking for longs is that COT data reported that only, I think it was 7,000 short positions on the Japanese yen, or 7,000 long positions on the Japanese yen, and 70,000 short positions on. Let me re-say this so it sounds more intelligent. There was 7,000 long positions on the Japanese yen and 70,000 short positions on the Japanese yen. So although we're going through this crisis that everybody's freaking out about the value of the US dollar, the Japanese yen is being shorted very hard by the institutional traders, which is why we're starting to see this pump. We're starting to see the RSI move to the upside. We got the cross of the 20 and the 50 moving average. And now what I want to see, what I want to see is some sort of price pullback to start getting into some long positions, so we can start drawing some structure here. So we've got a little bit of structure here. Now we've broken these recent highs. Now what we need to see is same thing with that we were looking for on the S&P. Some sort of rounding over price coming back down into one of these zones, and then moving to the upside. So what this could look like for me right now is, let's see, we have another zone here, and then we have another one here. So if price decides to move from the bottom of this swing low up into this zone here and then start to round over, what I would like to see is price come down to this 50. If we can get this 50 right here, this J2 entry with a long position, stops just below the 61.8 and target right back up to the top, so a 66 pip stop loss and a 203 pip take profit. Nice 3-to-1 risk reward ratio. I think that would be my ideal trade setup. Now, the other option would be to take a trade here on this 38.2, which is our J3 entry, and that would look something like this. A long position at the 38.2, stops just below the J2 entry, the 50%, and take profit right back at the top of this Fibonacci zone. So same thing, 66 pip stop loss and 165 pip take profit. Either one of those would be good for me. So like I said, again, right now we are in a big waiting period. We either are moving sideways in the markets or we're moving in one clear direction, and we're really just waiting for pullbacks so that we can start to get into some positions. So with this moving average cross here and the RSI continuing to move to the upside, I'm definitely, in the COT data, I'm definitely looking to get into long positions on USD JPY. RSI moving up towards this 70 here, telling me that we're starting to get a little overbought here. So hopefully overnight we should start to see that rounding off. You know, the same thing we're seeing on the S&P, same thing that we're seeing on the NASDAQ. We're seeing on the USD JPY cross, and yeah, it's just waiting for that rounding over to happen so that we can enter a long position. GBP CAD. This one hurt a lot. Not really. But it did suck to lose a trade. So we took an entry off this 38.2 here, which obviously was the wrong entry, or maybe just my stop wasn't wide enough. If I would have had my stop just a little bit lower, about 10 pips lower, we would still be in the trade. We'd be at about break even. Now, it is what it is, though. So let's think about why price came down to the 50. And it didn't just reject off this 38.2. So if you look at price here, you have this and this here. Two rejections right off of the 50. Yes, the 38.2 did look good because we had this rejection over here, a rejection here, rejection here, rejection here, this long wick down to the 50 over here, and then price continued to push back up to the upside. The issue is that that's not where price wanted to stop. And it's like that sometimes, you know. Sometimes you think, hey, I think this is going to be the best entry that anyone could have ever taken on GBP CAD. But it's not, you know. Price wanted to come down to the 50, and that's why we have multiple entries. You know, that's why we have a J1, a J2, and a J3. And so, yeah, we lost the trade. But let's start to analyze this a little bit and see if maybe there's some new positions that we can get into. So on the moving averages, on the 4-hour, oops, not what I wanted. We got a bearish cross, which is telling us that price wants to start moving down. Now, we could potentially see something like this happen with the moving averages, where this moves to here and this just moves, and we only got this bearish cross here just to come back down to this 50 and kind of do a little bit of a fake out, make traders think that price was shifting. But if we draw a trend line down this zone here, if we draw this trend line here, and what we can do is wait for a break. We can wait to see if price does want to break out of this trend zone and continue moving up. And if it rejects off of it, and we can create another new low here, and these moving averages can start to round over. If we can start to see these moving averages continue down here, price reject off this trend line and kind of give us a break and a retest, then yeah, we're going to start looking for shorts. But I mean, it's the same thing across the board right now. We are in a true waiting game right now. The RSI is kind of at this middle ground, right? So we need to see price action do something here. We definitely have some sideways movement here. Lots of rejection to this upside. Price is clearly moving sideways here. You could see that we're moving in this range or this channel or whatever you want to call it. We're moving sideways. So we need something to happen here. An option for a trade would be to draw our fib to the top and get into a position down here again at this 50 if we come down, or if we do break this trend. So those are two options here. Getting into a position back down in this zone and taking it up to the top, or waiting for price to continue to the upside, give us some sort of break, round over, look for some entry at this point here, and then take price back to the top. I'm sure that a lot of people will look at my trading strategy and be like, oh, you can't just trade break and retest. You can't just, my strategy is simple, and I made it simple because I don't want to sit here and confuse myself and others trying to teach them this extravagant, elaborate trading strategy that, yeah, it might work. But is it sustainable for everybody? Most of the times, no. Most of the times, it's not. So I've created something for myself that is retainable to others and easy to understand for myself. It was easy to set rules for it. It was easy to say, hey, at a J1, which is the 68.18 retracement, stop losses go below structure. At a J2, the 50% retracement, stop losses go below the J1 entry or the 61.8. At a J3, stop losses go below the J2 or a 50% retracement. Take profits are always at the top of the fib. 25% always comes off at 1R. Another 25% always comes off at 2R. If we have a 4R trade, 25% will come off at 3R. Stop losses move to 1R, 2R, 3R as we progress through the trade. When we hit full take profit, we let the remaining 25% of the trade ride, and we move stop losses as new structures created. When you hear traders say you need a set yourself rules and guidelines in trading, you do. And you need to follow it, and you need to stick to it, and you don't need to veer from it. The trade I talked about earlier on the S&P 500, where I took a little bit of a short position, scaling down to the 5-minute, I still followed my same exact rules. I just did it on a different time frame. And it's in a testing phase right now. So if you're in the Discord, I didn't call the S&P 500 sell. I talked a little bit about it in Money Talk, but I didn't actually call it out as a signal because it's a testing phase right now, seeing how well this trading strategy that I've developed for myself works on these lower time frames. So right now, GBP CAD, couple options. We're either going to wait for a pullback down into this zone here, which is the J2 entry. So if we draw this fib back, it's a J2 entry here. Stops below the 61.8 or the J1 entry. Target, top of the fib. Let the remainder of the trade ride once we hit that. And this isn't really a bad trade either. I mean, this is a 4.5 to 1, 38 pip stop loss, 172 pip take profit. It's definitely an ideal trade setup. So it's just in a waiting game right now, waiting to see what happens, if we're going to continue up or if we're going to start to round over and pull back to the downside. Now let's move into the fundamental side of things. Today we had our GDP QQ, so that's quarter over quarter, come in. We were expecting a 2.7% and we got a 2.6%. So that is a negative quarter of GDP. The technical definition of a recession would be two consecutive 2 consecutive quarters of negative GDP. Now, obviously, they've changed that over the last year. I'm not exactly sure why. I didn't look into it. But they've changed the definition of what a recession is. But I think that, I mean, if we get another QQ GDP come in lower again, we might start looking at the face of a recession here. Now, that isn't to scare anybody, but it is to, let you guys know that I don't know that it's so much to prepare, but as a trader, we want to see these things coming because we want to be able to make smart and informed decisions on what trades we're going to execute, right? So part of the reason we've seen price continue to the upside for the S&P 500 and gold and the NASDAQ today is we did get this 2.6%. The goal for the Federal Reserve, as we've talked about, is to get that inflation level down to that 2% level or heading with a good trajectory down to the 2% level. So as investors see numbers that we would generally want to be going up, right? We would want a good increasing or a good steady GDP. We would want low unemployment claims. We would want a good jobs market. But because inflation's so high, they want these unemployment claims to start to rise and continuously go up. They want GDP to come down a little bit because they want that inflation to start coming down. People start losing their jobs, they start spending money less, and which in turn will cause prices of things go down. It's just simple supply and demand. And when prices start to go down, inflation will start to go down as well. So with GDP coming in not crazy less than what we were expecting. I mean, we got a 2.6 and we were expecting a 2.7. And we got a 2.7 for the last one. So them seeing that change kind of tells people, hey, what the Federal Reserve is doing might be working. With the banking crisis right now, a lot of people are starting to move into this risk-on environment saying, hey, I don't think that the Federal Reserve will continue to raise interest rates, and perhaps they might even start to cut them to kind of slow down these banks having to get bailed out. So we have a little bit of a risk-on mindset. Obviously, we could see that from COT reports as they start to go long on things like gold, long on things like the S&P, the NASDAQ. So that's kind of what we're waiting on right now. We're just waiting on price to continue to move to the upside and continue to see these numbers come in like we would want to see them if we were a bull or like we would want to see them if we were a bear. I personally wouldn't consider myself a bull or a bear. I'm a trend follower. If price is going up, I'm a bull. Price is going down, I'm a bear. So that's kind of why we started to see price continue to move to the upside, because people are starting to think, hey, maybe the Fed's going to lay off a little bit. Unemployment claims came in almost right spot on. They were expected 196,000. We got 198. What the Federal Reserve wants to see is that we want to start to see twos here. We want to start to see 200,000 unemployment claims. If we continue to stay at this number, we might start to get those fears again that, okay, maybe it's not actually working. And that's the thing with what's going on in the markets right now. You have this big game of ping pong going back. It's working and then it's not working, and then it's working and then it's not working, and then there's a banking crisis, and then it's like, oh, the Fed's gonna stop raising interest rates, so that means that, oh, that's good. Maybe the economy will stabilize and we can start getting back into the market and it'll start to go up. But it's just kind of waiting for that next thing. What's gonna happen next? And yeah, our job as traders is to react to what's gonna happen next. So moving into tomorrow, for the United States, we have the core PCE Index month over month. This is the personal consumer expenditures. So let's just read down here. Differs from core CPI in that it only measures goods and services targeted towards and consumed by individuals. Prices are weighted according to total expenditures per item, which gives important insight into consumer spending behavior. CPI is released about 10 days earlier and tends to garner most of the attention. So basically what that's telling us is that this is going to look at the general retail consumer, what they're spending their money on, and how it is affecting inflation. So we might not see anything crazy happen in the market. We might see a little bit of a push. So you see this actual greater than forecast is good for currency. If this comes in higher than 0.4%, that's telling people that consumers aren't slowing down their spending, which means inflation is not getting tamed. So we probably will see the S&P 500, the NASDAQ. We probably will see those sell off a little bit tomorrow if PCE does come in higher. Now on the inverse, if it comes in at 0.4, which means that we would have come down 0.2% less than the previous reading from last month, or lower than 0.4, I think we might see quite a bit of a rally tomorrow on the indices like S&P 500, US 30, and NASDAQ. So this will come out at 8:30 in the morning, and we're just going to be waiting to see what that number brings, and hopefully it will come out in our favor. So what my hopes is, it's a hope, so we can't really take it as a trade because it's a hope. But what I would like to see is through London session, price of the S&P 500 round off around 8:30, be sitting somewhere around here. PCE come in lower than expected or as expected, and then price to rally off this zone. So that's what I would like to see tomorrow with PCE. But like I said, it's just a waiting game. We're also looking at the Chicago PMI and the revised University of Michigan consumer sentiment. So for the consumer sentiment, if this starts to go down, basically what this is asking is, how do consumers feel about the economy? If this comes in less, traders might say, hey, they're starting to feel bad about it. That's a good thing. That means that maybe they will stop spending money. And we might see a rally off of that as well. So kind of just a waiting game. We got news at 8:30, 9:45, 10 a.m. Now for GBP CAD, this is a big one right here. We have Canada's GDP month over month coming out tomorrow. So if this GDP comes in higher than expected, so if you look at this, actual greater than forecast is good for currency. So if we're looking at GBP CAD, if Canada's GDP comes in higher than expected, that would increase the value of the Canadian dollar, pushing the value of the Great British Pound in Canada down. So how does that translate to the chart? So if Canada's increasing, so Canada up, GBP down, what we want to look at is this initial pair. So this GBP, if Canada is going up, GBP is going down. And what this is essentially a mirror of this chart is the value of the Great British Pound in Canada. So right now the value of the Great British Pound in Canada is $1.67. So that would be the conversion rate. And what would happen tomorrow if Canada's GDP comes in higher? We will see this round over because the Canadian dollar will get stronger, making the Great British Pound worth less in Canada. So this will probably come down into this zone, hopefully, and we can look for a long position. What else do we got? We got CPI, the Consumer Price Index core for Europe. Well, this is actually for the euro, so any country that uses the euro tomorrow, this will affect. Generally, we don't really think about all the other countries within the euro that it's affecting. We're just looking at the euro itself. So you have the CPI flash estimates year over year and the core CPI flash estimates year over year. Let's see. We have a speaker tomorrow for Europe, and then the FOMC member Waller will speak tomorrow at 10 p.m. for the United States, which is pretty late, 10 p.m. Eastern time. But other than that, that will be the closeout of the week. So to close, we got Canada's GDP and the PCE Index for the USD. These are the two that I'm mainly going to be looking at. I don't really trade any euro pairs. I do trade Euro USD, but I mean, this trade's been running so well. We have our stops in place. It's just following our rules from here, so I don't really care how that comes out. And then, yeah. Yeah, so really just waiting to see how this USD news comes out, so we can potentially get into some trades in the S&P 500, USD JPY. Waiting to see how Canada's GDP comes out, so maybe we could potentially get into some trades here for GBP CAD, and then gold as well. It's kind of just waiting. I mean, look at this. We just talked about this 2 seconds ago. How I was saying we did get this cross here, but it could have been a fake out just to see that maybe people will start to look for things to move to the downside. And what do we start to get here? We start to get potentially another cross here on gold, saying that, no, we actually are continuing to move up to the upside. We just needed a little bit of consolidation here. So just a waiting game. I'll probably just look to enter some trades around 5 in the morning to 9:30, 10 o'clock-ish, somewhere in between that 5-hour span. I'll be checking in periodically, waiting to get into some positions. Other than that, don't forget our Discord is free all the way until May 1st. We're running a little bit of an Easter sale, so if you wanted to get in, see what kind of education we post every day, if you want to be a part of our live stream starting next Monday, you'll have an option to access those for free. All of our trade signals and setups. We have some fantastic indice traders, commodity traders. Myself, my business partner Jaden, he's a co-owner of DeFi DaVinci. You'll see him here on this channel as well. All of us sending the trades that we take on our personal accounts straight to the Discord, so that you guys will have an opportunity to get into positions while you're still learning how to trade in these markets. So that being said, thanks for watching. Don't forget to like this video, comment, subscribe, hit the bell so you don't miss out on anything, and have a good night.